Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been another monster week. We've got so much macro financial news and crypto news to get through. We do welcome a few hundred new subscribers again this week, so thanks for joining Nuggets News on this financial and crypto journey, so much of which is intertwined these days. And these videos are getting long in the tooth, so we do always try and timestamp them as soon as we can. So normally within an hour or so on a Sunday night. And for all our videos, we do have those timestamps so you can check the sections you do want. Now, I just want to start off by saying a big welcome to everyone that is going down the rabbit hole for the first time, or friends and family. Please take advantage of all our free resources over at nuggetsnews.com.au on all topics crypto and financial related, but particularly the members. Without you guys, there is no Nuggets News. We've just hired another staff. I think that's number 17 on the books now. 105 new members just this week alone, and we've passed that 2,000 number. I'm going to talk about some of the brilliant posts and the research that you guys are contributing yourselves on top of our research. It's just so great to see, and that live video and the questions we did on Thursday night, again, that is available for you to rewatch, all time-stamped as well. Our latest member report is out. You'll find all those in the unit section, gold and silver analysis, as well as the hidden gems and best projects that we try to look for. And we've had a number of these go up over 1,000% in the past 12 months. It's crazy to even throw those numbers around. And I'm just so grateful that I have a research team now to help me. Again, none of that is possible without your support. So thank you. And our partners over on the website, as well as in the members area, we've got plenty of partners and affiliates to get you guys discounts, and we are still running that 100% free Bitcoin. If you are planning on signing up to doing some stock trading, ETFs, learning about currencies with the practice platform they've got there as well, it's all possible over there with eToro. Okay, so let's get into the local news, and we have had that sharp virus outbreak in Victoria. Obviously, we're getting this mix of headlines, fears about prices falling and economies crashing, as well as people still saying that property's great, it's going to recover, and there's very little downside. So the truth's always somewhere in the middle, and that's what I try and keep it data and factual on the channel for you. But the fact is, we've got a lot of community spread now. So nearly 300 cases yesterday. We haven't got the final figure for Sunday yet at time of recording, obviously, but I've got friends that are working in that contact tracing department, and it is now getting out of hand when you've got these hundreds of people trying to contact the hundreds of people that they've come into contact with. So this is one of my fears, and why I was vocal in saying, let's go hard early. Let's go full lockdown. Do it for 4 to 6 weeks. Look at New Zealand, the situation that they are in. So again, I think that is what would be best to do now. We can't keep going in and out of this unless people are going to take it seriously with the masks and the washing of the hands, or we get more treatments out there. But when we get to the stories about the US, I think even the people that weren't sure whether or not this was as bad as we're seeing in the media, I think more and more people are realizing that you can't let it get to the point where the RCUs are full. So once this news broke, obviously the Australian stock market and the Aussie dollar, a lot of weakness in markets. Panic buying started again. I think there's no need for that. Well done to those people that are prepared. But like we saw last time, guys, there's plenty of toilet paper in Australia. I don't think we're running out of that stuff anytime soon. So no need to panic there. Home lending worst on record. This is something that was far worse than the economists and their predictions. Scott Morrison came out and said, don't panic. Now, I always kind of laugh when someone like that says, don't panic. Sometimes it is time to panic. But in any form of investing, you never panic. You always have a plan. If you're living in your house for the long term, this doesn't really bother you at all. It's people that have over leveraged and speculated that should be worrying. And sure enough, Scott Morrison came out just yesterday or the day before and said, there's no need to panic. But his reasoning is what I completely disagree with. He's saying that house price growth in Australia hasn't been driven by investors and speculative credit. And I think that is the sole reason, the availability of credit. You're dropping interest rates, the mortgage fraud that we saw from the Royal Commission. In 2015, when markets peaked, half of all mortgages were for investors. Now, there's literally what he's saying here. Now, that's since collapsed by 60%, but there was a huge wave of interest-only loans as well. Why are people only paying interest? Because they think they're going to be able to get capital growth and sell it. So our household debt to income, it's off the charts. Have a look at that tweet if you want to read Scott Morrison's comments in full there, or have a look at those charts that I shared. Some of you don't like Twitter, but it really is somewhere where if you follow the right people, you can get a lot of great information as well. So Martin North and I dived into this in far more detail in our episode yesterday, the monthly update. I'm just going to skim over some of these other Aussie headlines, but a quarter of Aussie properties now underwater because of how fast price went up. We've got so many people that have got, the 80 or 90% loan to value ratios. 1 in 10 loans frozen as property investors and businesses seek that aid. This is where the conversation is getting to, can you extend it? So APRA have extended the relief for banks until the 31st. This is allowing them to call mortgages that aren't being paid, good quality. And this is where things can get risky. And Martin and I talked about that in great depth. But we've seen the limit hit on how much we can withdraw from our super, so 27 billion. I think we're going to see more of these things be put on the table, or more government support, or the big one is the RBA. They haven't really had to print a lot of money like we've seen the Fed and other countries do. So I think that is definitely on the cards, more money printing in Australia, and that's going to send the Aussie dollar lower. So despite all of that, we've now got the banks and their CEOs talking about, at some point you have to start paying again. So end these holidays despite the setback. ANZ coming out and saying, if you're struggling, you're going to need to consider selling. So this is an interesting conversation. Where do you fall on this scale? Should they be doing more? They've got the government support. They're probably going to get the RBA support, printing money and buying any distressed assets off their books. Yet they're saying that distressed borrowers, you need to consider selling. And this is something that you would have never dreamt that the banks and the CEOs would be saying. Selling houses and causing that cascade, I wouldn't have thought they'd want to start that. But really fascinating to hear them say these type of things. Another very interesting sentence from Josh Frydenberg here is talking about the economy will recover strongly, but wages and jobs will not. So I'm not really sure what economy he's talking about. If the majority of people, the economy to them is whether or not they've got a good job and their wages are growing and keeping up with inflation and the costs of goods, costs of living. Mixed messages there. The RBA, or every country around the world, they need their government and central bank to be on the same level, and the banks. At the moment, there's a lot of who should print the money, who's going to spend it, as well as once it's printed, it stays in reserves at the banks. It's not getting directly to the people in a lot of countries. Now, with that as a bad enough backdrop, we've got these tensions rising between Australia, the US, China, and Hong Kong. And Australia has halted those extraditions and extending these visas. Now, this obviously upset China. They're trying to put their foot down and really take over Hong Kong again. I've got friends, Aussies, that live and work in Hong Kong. Some of them are there. Some of them have been forced to come back. So not a nice situation. Talking about schools, ensuring that all this patriotic content and remove all these books that are breaching the China security law. So it's getting back to the old, being told what you are and are not allowed to think. It is crazy to think what is going on in a country that was so normal, an investment hub only 12 months ago, like Hong Kong. Now, Australia has warned their citizens about the risks. Obviously, if you are traveling through China, it's probably not the place you want to be with everything going on. Chinese banks preparing for the worst. They've seen a lot of cash withdrawals, a lot of bank runs being cut off from SWIFT with the sanctions. We've already seen the big bank runs in Hong Kong, ATMs dry. These are the sort of reasons where the peg is probably going to be lost between these currencies. In previous years, 2016, once we had big capital controls, this was a real big boon for Bitcoin, and maybe it is again, I'm not sure, but particularly stablecoins. We'll get to that in the crypto news, but this is what I talk about. There's so much overlap between the news that we're talking about right here and people that aren't taking crypto seriously. They don't realize that crypto and stablecoins, it's got one of the most important roles to play in the financial crisis we're facing, but they still don't even understand what they are. All right, so Robinhood envy. China actually came out and told its population to start buying stocks. Now, it was only a few days later, I don't think it was even a week, when they had to hit the brakes because markets were just going vertical. People, same sort of arrogance. There's no way I can lose. Stocks only ever go up. You've heard these stories time and time again. And sure enough, we got these warnings, and the state funds have started selling into that rally. So I don't know how this works out good in the long run when you add $1 trillion in a week, but then the hedge funds are selling and you've got these retail investors that they're taking money off. So it's almost the opposite. It's transferring the wealth from the hedge funds away from the average investor. Here we can see the global flows into Chinese equities. So this is the global Chinese equity funds, and we've seen 11 straight weeks of net outflows. So this is what we're talking about. The big actual funds are selling, and the propping up of the market, that $1 trillion, I'm not sure, is that government money? Is that the retail investors? But someone is soaking up these huge sales from the funds. And when we actually have a look at just the weekly inflows into China, in terms of the capital, since we had the big downturn, a lot of that money has now gone back in. You can just see that behind me here. So money is going back into China. Maybe it's looking at getting out of Hong Kong. That's the only place it can go. I'm not sure, but there's no trouble getting money into China at the moment. They're welcoming that. It's the tightening of the capital controls to not let it go out. They want it to go into their assets, their economy, their markets. Okay, so more geopolitical chaos. TikTok, who would have thought that a little app like TikTok is in the headlines constantly for tracking data? We've had rumors that the US are going to ban it altogether. Certain companies have told employees they're not allowed to have it installed on their phone. A lot of you watching this probably don't realize that maybe your kids have got it installed. It's a Chinese app and it is collecting a lot of data and even tracking things that you copy and paste, like passwords or cryptocurrency private keys. So be really cautious there. And funnily enough, is this a coincidence? It did crash across the US and UK this week. Stock slide in the US, again, looking to crack down on the companies that are doing business with Huawei and other Chinese tech giants. So they just can't risk similar stories to TikTok, tracking of the data now that the tensions between the two superpowers have risen. Now, this is a chart we revisit every week. It's the mobility trends from Apple that are tracking all their users. Italy, Germany, United Kingdom trending up, but the US, a little bit hard to see here, but they have had the first sort of downturn. People are no longer as mobile as they were a couple of weeks ago. So look, we've had that huge wave. Maybe it's finally hitting home in the US. Maybe this is just an anomaly. We'll wait and see if the trend continues higher. But when you consider the numbers and how bad things are getting there, to think that they're just higher than even before we had the COVID outbreak, it's not good. And I think the delay that we see from the coronavirus cases through to ICUs and deaths, it's really started to hit home this week. And out of all the worst outbreaks around the world per million residents over the last 7 days, these US states are now worse than a lot of countries around the world. I really do feel for some of the US citizens that are trying to do the right thing or reopen their business. And some of the stats that we're not seeing, I know in the comments they're going to light up, and there's people out there, I've said this before, some people don't believe COVID is real or a virus even exists. There's other people that are too worried about it, and there's a lot of people that are young and healthy that don't have to worry too much about it if you do the right thing. But what we are finding now that worries me is the second order effects, people that don't quite recover. The neurology it's affecting, radiology, all these different lab findings. And if you're going to tell me that there's, COVID's not real, then you're almost going down that path of flat earther. Like that, you're telling me that hundreds and thousands of scientists, all these guys that are studying it from different angles, the surface proteins, the neurological effects, you've just got to keep an open mind and start reading this evidence that's coming at us from every angle, that this is something that we need to take very, very seriously. So the curve is no longer flat. We've started to see the ICU beds fill up, 90% full in half of Florida's ICUs. These are the workers that are trying to incubate people. We still don't know if the breathing and the lung apparatus is the most important thing, the oxygen levels, if it's more of an inflammatory disease and we need to be fighting it from that angle. So once again, I really feel for the healthcare workers on the front lines, and the numbers that I think we're about to see in the next 2 to 3 weeks are going to be a real shock to a few people. All right, so let's get into the actual economic data now. Low-income Americans are suffering from the inflation shock. We've talked about the costs of food, these everyday goods that have gone up it's really hurting the lower end of the spectrum more than anyone else. COVID, we've got these long lines. We've seen it on TV, kilometers long, for people that are just trying to get everyday goods. And this is something that a lot of Americans and even Australians, the age of entitlement that we've lived through, they're not used to this at all. 2 million residents in California that are waiting for unemployment checks. These are things that people wouldn't have dreamt 6 months ago. 13 million gig workers are getting unemployment benefits, 41% of the total. Now, in Australia, that's a group that we've really left out a little bit, and I'd like to see the numbers there. And if you're a gig worker, let me know in the comments below how you're going, if you're getting that support, if anything's changed there, because I know that was definitely a segment in Australia that we weren't looking after, as well as others that were getting paid more than before. So consumers have stopped spending on the credit cards, starting to repay that debt. We saw the personal savings rates really spike, and it was the US consumer that was the big driver of their economy. We've really spoken about that a number of times. Here we can see the numbers. So only 1 million new claims this week, but those continued claims, nearly 33 million total, federal and state. Those jobs aren't going to be there to go back. I hate to say it. And you see that business activity, even with that number there, business activity saw a record surge in June, and we're still staring down the barrel of that huge number. And when you look at these Yelp figures, I was just astonished by this. So 52% of all restaurants have shut permanently. You can see April closes to June, we actually had around 30,000 businesses reopen. So that's fantastic, slowly reopening. Here we see, though, that the restaurants, 53% are permanently closed. So shopping and retail, that's why Amazon is $3,000 a share. They're just taking market share off everyone else. Beauty, fitness, yes, we know these sort of industries that have been hit, but it's the people that went back to work that are now being told, you've got to go back on that job support. They lost their job, and feel for those businesses. Now, some businesses were already facing tough times and they've issued all this debt. The oil shale companies were only halfway through 2020, and we've already got 55 billion of these oil and gas companies that have gone bankrupt. 260 billion. Huge numbers. This is why the Fed have had to step in, to support the government, who can't do all the heavy lifting, but just to stop those businesses and the CLOs from blowing up like we saw in the GFC, that those debt markets, those obligations, that's what can really start that chain reaction. Now, oil's been hovering around $30 or $40. When you recall a month or two ago, it's at negative $30 or $40. And the world's biggest oil importer is running out of storage. So this is something that hasn't been in the headlines. Maybe this does get people's attention and we get a bit of that sentiment going again. But if oil's hovering around $40 and storage is full, I think we have to go lower there. So possible maybe trade idea. A lot of the storage offshore containers, the shipping vessels, that's where the money went to. So they got to charge a huge premium, and some of those stocks skyrocketed. So maybe something they'll do a write-up on for members this week. We did get some more details about all the different companies that got the PPP loans. Billionaires, country clubs, I think it was South Korea's largest airline. We've seen people that have criticized it. We know that they've got it. Some crypto companies even got this. So there's been a lot of mixed emotions come out about who should get what. But really, if it's to protect the paychecks of the employees and to keep them getting a salary, I don't really mind who it goes to. But surely we've got to put a cross next to some of these names. Billionaires, should they not be able to support their own staff? Let me know where you sit on that one. A couple of stories I did want to throw in here as well was Deutsche Bank getting a $150 million fine for the whole Epstein negligence. Obviously, this story's got another chapter to play out with the Gillian case that's coming up. But, Wall Street are just laughing this off. Another slap on the wrist. Oh, we'll change. We won't do it again. Tiny little fine compared to how much money they would have made over the years. And another one that's not going to get away with a slap on the wrist was Bayer. So I touched on this last week. Their roundup has been a number of times now where they've settled. So it's never actually been proven that it causes cancer because they pay out and they settle. And this judge has actually said, you know what, I'm not actually happy with a settlement just to continue to let you get away with this and pay a little slap on the wrist to keep doing it. So this is possibly going to go further. And if charges get laid, that really changes everything with this whole Roundup saga causing cancer. Okay, so real estate CEO expert predicts this exodus of businesses out of the CBD the next 2 years. We've been talking about this on the channel. We've seen Sydney at record vacancies, Manhattan rentals implode. So good if you're a renter there. There's plenty of vacancies and the cost has gone down. But those that are coming into refinance as well, the banks are nervous. They know what is going on. So they're now saying even if you come in and refinance these large mortgages, you've got to have at least $1 million balance. So the goalposts are being moved, even though at the same time they're being told about not having to have those reserves. We've got your back. The Fed are going to buy bad assets off you. We've already printed money and given it to you. Their job is to loan money out, and they're putting up these barriers and making it harder to get loans. And that's the double-edged sword why I think we are heading for some sort of, cliff. You can't just keep kicking it down the road, as some of those CEOs are saying. And this is where governments, I don't think they realize how bad the actual numbers are. So retail and hotel commercial mortgage-backed security delinquencies, people that aren't paying those on time, that's up to 24%, 18% in retail. Similar story in Europe as well. So they're forecasting these deep recessions. There's some good charts here about exactly the numbers that they're throwing around, 10% in a lot of countries there in terms of GDP fall. Germany, a strong economy. They're warning 83% of firms with the international exposure, collapsing revenues. So they're not going to be able to pay all the bills, the corporate bonds that they've issued in many cases. And they've got a wave of zombie companies, just as we've seen in America. So this is from the European Stock 600. They're now talking around 10% or more of companies that classify as zombies, so not being able to cover the interest on their debt. And the number's even higher in the US. At some point, those people need to get a new job in a new industry rather than just dragging that on. It's far worse. You've got to rip the Band-Aid off, but they seem to want to kick the can. The Swedish Central Bank, they've boosted their QE program to fight the downturn. They're going to start buying corporate bonds, picking winners and losers. But you got to remember that these central banks are already printing money to buy tech stocks. So when you're fighting the old saying, don't fight the Fed, you're actually fighting all these central banks that are printing money out of thin air to buy stocks. In many cases, because they don't want their currency to get strong. So imagine if Australia started to do that. Guys, the Aussie dollar's too strong. We're going to start printing money to buy up Tesla, Apple, or Amazon. It's a very, very strange world we live in at the moment. Latin America heading for the deepest slump since 1901. It's these emerging market economies that don't have the privilege of being able to print money and have demand for it. They're at the whim of global economies that need their resources. So this is why their debt and equities have been hit so hard. We see the flows that are coming out of these different regions. and they've underperformed obviously on their stock market there compared to the developed markets like the US. Monthly budget review. This was the biggest debt we've ever seen in June. So $863 billion, nearly $1 trillion in a month. This is the big question about how long the rest of the world will let the US run those sort of deficits and just print money before the US dollar starts to devalue. And then the question becomes, well, what is the next most stable global currency? And that's where gold is getting the spotlight, and possibly Bitcoin has a role to play as well. So stocks slide after Joe Biden, who, remember, he's the favorite now, is vowing to end shareholder capitalism and raise the corporate tax. I touched on this last week, but this is very bad for those big stocks if you're telling them that they're going to be paying more tax. But he's trying to pay down the debt. And this is, again, the thought process in economics is that you can't run those huge deficits. You've got to pay down that debt. Now, I want to throw this in there because even though Biden's favorite, let's not forget that Trump was huge odds to begin with. And now we've got someone like Kanye that people laughed at, and he's already gone from 500 to 1 to 50 to 1. And is he going to take votes off Biden, or is he actually going to take votes off Trump? This is something that I'm not an expert on, so US followers, let us know your thoughts down below, how that is all going to work out. But the Fed, interestingly enough here, it's been 4 weeks where they haven't been printing and using those different vehicles. And I've been talking about, I don't think the stock market can continue higher as long as they're not printing money. And we've been sort of chopping around sideways. There's been a bit of strength. We know there's actually $5 trillion on the sidelines now from all the money they've printed and the funds that were thinking we're going to have another leg lower. But the Fed are actually letting assets run off their balance sheet. And I really think to get to new all-time highs, we need the Fed to step up and start printing money again. Now, Elon claims that they're very close to the first fully autonomous car. It's not the first time he's made this claim, but they did surprise markets with their sales. Look at this, the market cap compared to the revenue here. So very lopsided compared to these other companies, which have got huge revenues, but very small market caps. Tesla is the largest now in terms of market cap, larger than just about all these others combined, but very little revenues. And people are now looking at this as this huge tech company. That's one angle. The other angle is simply, as you see here, we've just got Robinhood users have piled in here. So what's this? 400,000 in the past 6 months. Let's call it 300,000 new users that are buying Tesla shares that are now up to $1,500. We see big buying volume coming here. So this is the options on Tesla, and I've done a lot of videos on options on Bitcoin for you guys as well. But this is the 2,000 calls and the 2,500 calls. So people are betting that Tesla is going to go up to 2,500, and this is the July 17. This is just ridiculous. They're saying that in the next week they think that Tesla can go up another $500,000. This is the market that we live in. That is absolutely nuts. I didn't realize it was that short dated, the options. So there's all the money that is flowing into the big tech stocks, trillions and trillions of dollars. It's pretty much all from the Fed. We've got a $10 trillion rally, and now that hinges on the earnings. And nobody's got a clue about earnings because 80% of companies stopped giving guidance. But does that matter? I mean, are they just going to lowball their earnings estimates and then make sure they beat them by a little bit so the algorithms push markets higher? If earnings are terrible, does the Fed just step in and print again? They're the sort of things, the themes that we're watching over the next few weeks as everyone is forced to report their earnings. Now, Wall Street vets saying that the S&P is going to rocket to 4,000 by next year. So these are the uber bulls that were nowhere to be seen when markets are at the lows. And the world's most accurate economist, he's got quite a different outlook. He's saying that it's going to be at least 2 years before full recovery and probably another stock market correction before the end of the year. The thing is that these short sellers have been destroyed. So the people that used to push the market down and maybe bring things to fair value is the way to think about short selling. A lot of these funds have just shut down. And another iconic short seller, so Lansdowne, they're closing their main hedge fund because they've had their worst ever losses. So people have been saying that, look at the calls to short Tesla or this stock. Well, maybe in a fundamental world, it was the right thing to do, but fundamentals are out the window, and some of these older investors haven't been quick enough to adjust. And I know it's crazy for me to even say that you shouldn't be trading on fundamentals, because in the short term, you can't stay solvent as long as the Fed can keep printing money. Here we see global M1 money supply versus the total return of the world indexes. This has been a leading indicator in the past, and this is percent year-on-year change. Nuts to think that we could have a lot further to go here if history is anything to go by. Another 60% higher in stocks because of the amount of money that they've printed. Don't fight the printing press, as the chart says there. And that is very good for gold. It's very good for all assets. But I don't think anyone is even taking those calls seriously. But when you look at just the amount of money they've printed and the correlation in the past, history would tell us that stocks could go a lot higher. Private clients, they are putting more money into equities since November. This is another huge inflow here. A lot of them have still got underweight positions in gold, which we'll get to in just a second. But it's the fixed income class, all fixed income, which has been really attractive. We've seen some money come back out of equities because they've done so well, but it's the yield that people are reaching for now with the different bonds. The US Treasury bond, it's still been one of the best places to park money. So this is the total return. Yes, you might only be getting 1 or 2% on the bonds, but investors continue to pay more and more for the actual bond itself. So it's delivered 9% returns already in 2020. And the US is the cleanest dirty shirt in the laundry. Once the US goes negative, though, and those bonds go negative, that's when I think gold goes to $2,000, $3,000. We can see here, this has been where we've had the most inflows from these different asset classes around the world. Cash and gold are leading the way in 2020. And who would have thought cash? But once again, if everywhere else is going negative or there's these other fears, these are the places that the serious money is looking to park. So absolutely smashed the record and the amount of money that's flowing into gold. $100 billion. Crazy stuff. That all has to be bought. We'll get to an interesting story in just a second. But once again, when we look at the 5-year forecast of real interest rates, like I just spoke about, if they're going to keep rates low and yet we're starting to see inflation, real interest rates, we've got that gap. And that's when gold performs really well. And this is just another metric telling us that gold is going to $2,000 an ounce. The story I want to get to, though, was the crisis in the COMEX. We've got all these short positions that have built up. This is a lot of the producers as well. They're going to have to produce the metal. They've shorted it. Someone wants to take delivery. It comes time to pay the piper. And there's a huge overhang here. And this is a good story on Money Insights if you guys want to head over there and read it. But just like we saw last time, we could be seeing some big spreads between the real metal and what we're seeing on the ETF price. And if you follow that arbitrage trade I spoke about between the physical and the ETF price, SLV got down to $11 something at the time. And what are we now? I think silver got up to 19 this week. So this has been a 50% plus winner just by being patient and letting the market come to us. And as I said, I'm planning on cashing out that trade and buying physical silver, and now I get to buy 50% more than I otherwise would have because the premiums and the cost of the coins, it never got down to $10, $11, $12. It stayed right up there at $20. So guys, we have got more precious metal reports out. If you head over to the unit section for our members, please read the gold and the silver, the precious metal, about how this is all being affected by COVID, and some picks from our resident precious metals expert. Some of the silver stocks he's picked performed extremely well. I did want to leave you with this message, though, about power and the central banks, just getting inside their mind. So pause the screen and have a read of this if you haven't already. But this is from 2012, when Powell was very new, and now he is the chairman. So this is when he addressed the chairman, saying that they've printed $4 trillion, the market's going to continue to cheer us on. We're never going to be able to stop. We're never going to be able to reverse course. This is going to blow an asset bubble. It's going to compress risk, and the moment we try to undo any of this, risk is going to explode, market's going to explode. So very interesting that he was aware of it, and now he's just pretending like none of this is an issue, doesn't cause inequality. And I think this just proves that these guys are just lying through their teeth. They know that what they're doing is wrong, but they have no choice. They don't want a market crash when they've got a COVID crash as well. All right, so I have a quick drink and we will get into the crypto news. It's actually pleasing to see a BitClub promoter being charged. There's a number of people that have promoted different Ponzi schemes in Australia, and they are on the list, so I think it will catch up to them eventually with regulators. We don't want scams. They give crypto a bad name. There's also some scam tokens floating around on Uniswap. So if you're trying to buy a lot of these projects that even I talk about, sometimes they don't have a token or it's not listed anywhere yet. And so the scammers will create their own token with the same name and they'll put it on these decentralized exchanges where anyone can list a token. And we've seen a lot of those this week. So please be cautious out there, guys. Watch my videos, stick to the platforms, ask us questions if you're not sure if something's a scam before you send money or ever buy a token. This was great to see that the Australian government actually reached out to the blockchain community and asked them for information about things like supply chain logistics, credentialing the sector. I've been really critical about Australia's need to turn to tech and support it, and here they are doing that. So, props to them. I think more money into tech is where we need to go. China's central bank project is looking to collaborate with more of these domestic enterprises and get involved in the huge world of China e-commerce. We've already seen them partner up with the ride-hailing giant Didi in China. So this is being rolled out. Now, interesting comments here that I really agree with. The digital yuan is going to have a hard time displacing Tether in Asia. And not only that, I think that even the US stablecoins are going to have a hard time replacing some of these other currencies that have already got plenty of users. We've got the Swiss president looking to, get all that money and innovation come to their country. We continue to see this, but it's the digital yuan that it's looking to target the dollar. So maybe they're not so worried about Bitcoin with all the geopolitical trade wars. It's really the dollar and the SWIFT system that China want to try and get their currency as the world reserve. But it's these other coins that have got a foothold, and this is where it gets really interesting. So would you use something like USDC that's fully regulated after we've seen them freeze a number of addresses this week? We've also seen Tether blacklist plenty of addresses that are using the Tether stablecoin on different blockchains, as well as Ethereum. So that's the risk you take with some of these. Now, Bitfinex are actually, this is one of the first times that they've lost in terms of some of their hearings, and normally it's been going their way. But the New York court actually rejected their appeal. So this is going to go further into this dispute all about Tether and what happened there. The regulators are trying to take them seriously, and yet they're still doing things like the Dogecoin list. So Dogecoin pumped this week after a bit of a TikTok fad. We saw a number of exchanges jump on and list this just to jump on board that pump. That's a sort of altcoin season that we're going to get into in just a second, but we're definitely seeing hints of that now. Funnily enough, day trader Dave called the Dogecoin effort a pump and dump. So I think he is going to turn to crypto at some stage, but it is a bit of a joke. And I tweeted about this, that it's no coincidence that stuff like this is happening. It's a side effect of loose monetary policy. There's so much money out there now. People are getting these huge paychecks. They're just gambling. And things like TikTok being able to pump and dump Dogecoin. So I said this in the group that the funny thing is that it will probably pump really hard if this gets trending. This is when it first sort of became a thing on Twitter and TikTok. And I know a few of you jumped in and said, you know what, I'm going to jump on here and have a trade. And I certainly jumped on that as well. And next thing you know, it's up 100% in 24 hours. So this is nuts, but welcome to the Wild West. So this was just a graphic of the difference between the regulated, unregulated, and the algorithmic or decentralized versus the actual fiat-backed stablecoins. And Tether sits in that kind of middle unknown space. And these days, some of the DeFi projects are integrating these regulated coins, and I don't think that that's great. if you can freeze the accounts. Funnily enough, we had the Italian banking industry choosing decentralization over centralization. This is a huge conversation to have when you consider things like what XRP and Ripple are trying to do versus what DAI and Maker are trying to do. And I had that deep discussion, which I'll upload to my channel this week with Sam, who is a bit of an XRP guru. Facebook former counsel joins Coinbase as chief legal officer right as they're making this push to launch for a stock market listing. So can you imagine if Coinbase get listed and this tech stock boom in this bubble? We're in the middle of an alt season. Coinbase exec saying that the money's going to leave the US because of the crypto tax laws. And I've talked about this before, but the CFTC, they're saying, look, we're going to have a holistic framework by 2024. That is way too late. You cannot drag your heels for another 4 years when other countries are sort of welcoming this different innovation. Now, at the same time, they are rubber stamping some things. So the SEC did greenlight a crypto fund. So this is the first Ethereum tokenized SEC regulated fund. Really cool stuff. We've now got Treasury bonds on Ethereum, real estate funds. It's all happening. It's very cool to see. So look, regulators maybe dragging their heels in some regards, but they are allowing other things. South Korea considering a blockchain run free trade zone. Again, very similar to what we saw with Sweden floating the idea of. Expedia partnered up with Traveller.com. If you don't know, Traveller partnered up with Travel by Bit here in Australia. So once again, being able to use crypto for all your different bookings, pretty cool there. But Binance have actually acquired Swipe, so boosting their plans for a crypto debit card. And I'm sure that this is going to integrate with Travel by Bit as well. Binance added 15 more currencies. So it's just the number of on-ramps into crypto, monumental. And these different countries aren't going to speculate on alts. They're going to want stable coins, guys. Visa actually put out job application for an Ethereum and Ripple dev this week for global payments. Like I just mentioned with the Italian bank, are they going to go the decentralized or centralized option? DeFi is taking off. And I won't say too much about what's happening in Ripple other than to watch the interview when I upload it with Sam this week. Ripple did partner with Santander, so more and more regions into the app. I know they're going for smaller payments now rather than the big on-demand liquidity that they were initially. But this was an interesting one about Ripple co-founder spending a lot of time and money installing cameras around San Francisco. So where do you find the conspiracy sort of, XRP working closely with regulators and banks and now cameras and security to monitor everything we do? I'm not sure what is going on there, if that's completely unrelated or if it is part of something that they're trialing. Either way, good news for privacy coins, and Orchid is another little hidden gem that we've covered in our 5 FA reports. It's one I've invested in, and they have launched on the Apple App Store, and I don't think this news got the attention that it deserves at all. So OXT, it's actually on Coinbase and a lot of big exchanges, so I think this is another one that is going to do really well. Bitso hits 1 million users, crypto adoption in Latin America. Ripple and Coinbase-backed currency exchange. It's topped Argentina's crypto market 6 months after launch. We keep hearing these stories of Brazil and local Bitcoins. You're going to get sick of me saying this, but it's the stable coins that these guys want. This is a huge opportunity for DeFi. The future of stablecoins is bleak, according to one economist. So, look, love it or hate it, there's always going to be a way to be private. So Haven has pumped recently. That's a private stablecoin. We've got XDAI. We've got Tornado Cash. There's plenty of ways to be private and use stablecoins already. And I love this image from David Hay. Shout out to David. I believe that he's been saying he wants to collab. So if anyone's got a line to David, let him know to get in touch with me. But look, love it or hate it, DeFi is here to stay. It's kind of funny when these outdated finance laws in the US continue to play world police. KYC, AML, but really DeFi is it's going around. It's going to work in other countries if they clamp down on the US. It doesn't matter. Now, one of the biggest pieces of news this week was the launch of under-collateralized loans. So this is credit delegation, starting to build trust profiles about who you'll lend to, and if they've got a good track record, you can borrow more. This was what everyone was waiting for, and the critics saying, who would use an over-collateralized loan? Well, I said this months ago, it's coming, and well done to Aave. The lend protocol, I think this is up 6,000% since we covered it for you guys, or first recommended it and did the detailed write-ups in the group. Particularly Matt was a really big fan of that one, our head of research. So these coins have been performing really well. And it's the money Legos. Gelato, another fantastic project here that lets you automate some of the processes. This has moved into, is it beta or a live public alpha public mainnet. So this is another one the developers are loving. This is Gnosis Dex, a way to automate and swap different tokens. So a Uniswap like user interface. But I think this is one you're going to hear a lot about, because the automation of different parts of that world, being able to set different orders, this is just another space that the technology's there. It's all about the front ends and user friendliness, and that's what these sort of tools are going to allow for. Everyone's favorite from Chainlink Sergey saying that smart contract adoption by enterprises is about to take off. He would know, and hopefully I'm going to get him on the channel. Chainlink fans, if you can make that happen, I'm still waiting. Here we've got the top 10 coins by development in June, and as you guys know, a lot of my favorites on this list. I own most of these coins, but here's the one that I continue to say I think it's a hidden gem. It's now crept up to number 5 in terms of development. The team have entered the Reddit scaling competition. No one's talking about this. It's got a market cap of, $11 million? I'm just so bullish on Raiden, which is Ethereum's Lightning Network. So alt season, it has arrived, whether you like it or not. The top 10 coins, money will flow into large caps. Members are sick of hearing me say that, and it is happening there. Atom's been a great performer lately, and some of these others that are just playing catch up. Vet, Stellar Lumens, Cardano, really cool to see. And I wanted to share this. So you never forget your first alt season. Just have a look, and there's a big takeaway message from this. There's only 3 coins that are still here with us from back in 2014, I think this screenshot was from. Over 9,000%, 900%, huge moves. Alt season's not a new thing. Remember a few months ago when the Bitcoin maximalists were telling you that there'll never be another alt season and alts will never pump again? And I said, as long as there's humans and emotion and money, we're going to see more cycles. So be aware of that. 99% of coins aren't going to make it. Invest wisely. I like this tweet from Eric in response to Dan, who I am going to be debating soon as well. So about DeFi, and he's a maximalist, doesn't believe in it. Look, some of these things like the year of the smart contract platform, smart contract platforms are huge. This is DeFi, stablecoins. I'm not really sure what he's getting at here. This is all he's doing is proving that these things are still with us and they're taking off. And some of the better altcoins are up 100 or 1,000% since 2014. So you can't say that they've gone nowhere or they've all died. You've still got to pick the right ones. Another one that's crept up the list this week is Bancor. So new token economics. These coins aren't correlated to Bitcoin. One of the things I've been talking about for years is coins walking and treading their own path on their own fundamentals, and nothing makes me happier than seeing them not being correlated to Bitcoin and going up 1,000%. So happy days there. Well done to Bancor on the launch of their version 2 protocol, and again integrating Ren and Bitcoin. Kyber, nearly 6% of their supply is already staked. I think we're going to see far more than that now that you can stake your Kyber and earn rewards. The cat's out of the bag. So huge announcement. This is one of my favorites. I said earlier on in the week, Nexus Mutual are partnering up with Diversify to offer smart contract insurance, which is what they do. And I've interviewed Hugh Cart before. Then a few other people started to get wind of my favorite project. So $93,000 has already been paid out in insurance premiums. $28 million market cap, a PE multiple of 480. And sure enough, by the end of the week, I've got to be careful what I say here, but by the end of the week, it was common knowledge that this was my top pick for the year back in 2020, the start of 2020. I explained why it was the top of my list. We did that interview with Hugh. This is still not on any exchanges, so if you want to know how to purchase this one, I've made a tutorial, but guys, you've got to do your own research as well. If you're not familiar with these sort of things, then it's not safe for you to purchase them if you don't know how to store them, if you don't know what it is or what it does, if you don't know how to use an Ethereum wallet or MetaMask. Okay, so do all that research first before you use those educational pieces there. Now, if you are joining the group and you want to learn about this one, Ben did an amazing post collating all the different posts that myself and others have done on Nexus Mutual. So if you join the group, read all the learning units, but search for NXM, finds Ben's post from yesterday. That's got all the information for you to do your own research there. All right, Synthetics has been listed on Binance. This looks like it's going to be the first project to do 100x since we covered it last year back in March or April at 4 cents. And this week it hit $3.50 on some exchanges. So well done, guys. I don't know of anyone else that has got close to 100x. So the fundamental research is certainly paying dividends. Ethereum dApps are nearing 50% of Bitcoin transaction volumes. They continue to grow. It's not just the DeFi, it's the gaming space. Very, very bullish. So this is Fort exec talking about blockchains and games. We're going to see more and more of these launch. Neon District is a very cool looking gaming project if you want to head over and check out their website. But this is an RPG game that is going to launch on Matic Network. The Lego pieces are all coming together and falling into place. And funnily enough, some of these Bitcoin maximalists have kind of started to come around to Ethereum. So Tour de Mister, he's been saying Ethereum's going lower and lower for a very long time, and he's been wrong as it's been going higher recently, but he's finally turned around and said, look, I'm buying ETH. As a trader, I don't care about the fundamentals. ETH looks strong. The ETH Bitcoin pair looks strong. So when you've got even Bitcoin maximalists getting bullish on ETH, something must be going right. Now, sure enough, we had the trolls jump on this statement saying Ethereum 2.0 has been kicked back to January at the earliest. So this is not good news if it's true, but at the moment I think it's a headline that's been picked up because Preston, who has become a bit of a friend of mine, we chat, he said, well, I'm actually betting that Ethereum phase 2 it will be done before 2021. So Omen is a prediction market built on top of Gnosis. So sure enough, if you click this link, you can bet on this. All you need is your MetaMask installed. This is another prediction market. So when the lead developer says, well, I'm betting that it is going to launch before 2021, I'm backing him. Tokenized Bitcoin on Ethereum reaches $100 million. This is just growing at a very, very fast clip. I think Ethereum can scale Bitcoin. The maximalists don't want to hear that. They want to get Lightning working, which is fair enough. We've got Electrum, one of the best desktop wallets, is integrated Lightning support with watchtowers and submarine swaps as well. And now more websites. So we've got things like Bitfinex and WikiLeaks, which are accepting the Lightning payment. So this is where we need the businesses to do the updates, implement SegWit to start off with, but then implement Lightning Network as well to help clear the congestion on the Bitcoin blockchain. The hash rate is at a new all-time high. Look, I tend to think that price does follow hash rate. So another thing that is in our corner for higher prices. Kazakhstan setting their eyes on being a top 3 global miner. Every week I seem to talk about how this is becoming a geopolitical battlefield for who has the most mining hash rate by country. And Japanese exchanges, increasing their holdings during the pandemic. One of the criticisms of Bitcoin and mining, it often is when disaster strikes, the network will be down. But there's a lot of people that are running things like mesh networks, solar setups for Bitcoin mining, running full nodes themselves with the battery backups. So there's plenty of ways to keep the network flowing and the nodes online. A lot of these hydro-powered, they're not going down if the power goes down. So look, I don't think that's a real criticism, a real worry. Final story before we get to price action was this report by Macquarie Wealth Management, a huge Australian bank. and financial institution. And I mean, who would have thought that they would say that Bitcoin is a leading indicator of sentiment for global markets? And this was a 12-page, I think, report, 5-page, sorry. But have a read of that. It's publicly available. It just seems that everyone is getting on board, and Bitcoin is just sort of accumulating, going sideways at $10,000. Okay, so let's have a look at the price. We broke out of this falling wedge, and the next day we broke back into it. And that was a big concern for a lot of people, and rightly so. That is not what you want to see, a liquidity grab that gets smacked back down. But since then, the buyers have stepped in. So you can draw this a little bit differently. It's an art, not a science, depending on if you consider this another retest. But for me, we need to get back above this 9,400 level now. It's all about that weekly close, because this can still be viewed very much as a bull flag. When you look at what's happening here, huge increase. Now we've got decreasing volume, forming a flag. I still think we can make an argument that price is going a lot higher, but it is going to depend on equity markets, and they are, once again, very similar story. Find themselves right at this trend line, and everyone's worried about the COVID cases, earnings coming up. So it's this decision, this inflection point. And because we've had compressed volatility, I think we are going to see an explosive move this week in stocks. We've already seen gold break out to new all-time highs. Wasn't that fantastic? As I said, silver hitting $19. A lot of these of our favorite investments have been very rewarding lately. Let's see if Ethereum and DeFi and even the Bitcoin dominance, maybe it is going to get a little bit of that back after the alts have had a huge run recently. So they're the things I'm watching. I'll do more detailed updates for members daily. If you do want to become a member, guys, don't forget to head over to the website. Use our free resources as well. Smash that like button. Subscribe if you haven't already. Share these videos around, and I'll talk to you again soon. Cheers.